Good morning. Welcome to Trading Hour. I'm Reema Tendulkar. With me is Sonal Bhutra. So there is no sell-off at the index level, but Sonal, you can still see the cautiousness, the caution which is prevailing in the market. So ahead of the two big events, the US election, the FOMC meet. So at 11 o'clock, the Nifty and the Sensex are flat. Metals continue to hold their lead. The metal index is up more than 1%. Autos continue to rebound. The top gainers are Tata Steel, JSW Steel, Hindalco. On the way down, you've got softness in pharma. The Nifty Pharma Index is down over 1%, but the mid-cap index is under pressure. The mid-cap index is down 0.5% at the day's low, though the advanced decline ratio is still in favor of the stocks which are gaining.
Oh, yes. And that's the case with the small cap space as well right now. And after that brutal fall that we saw yesterday, and that has continued, right? You know, it was only, even on Diwali day, there was a big fall. We just saw some green on the screen on Muhurat trading day. But apart from that, we saw a brief green on the Nifty, but that got sold into as well. Metals index, as Reema pointed out, the biggest gainer, 1.6%. Nifty Auto has made a comeback as well. The numbers this time around were better than what the street was working with in terms of monthly numbers. But yesterday we saw a sell-off in the auto space, and now it has made a comeback. The PSU banking space is one which recovered yesterday from the lows in the last 1 hour of trade. That has continued its up move today as well. So that index is up around 0.3%. And energy index, which was the biggest loser yesterday, is also doing well. So those are some of the counters that you should keep an eye out on, and L&T is one of them because that stock is in focus. It is all set to buy a stake in Indian cloud company E2E Networks. An interesting acquisition. Vivek is joining us with more details on this one. Vivek.
Well, that's right. You know, like you mentioned, sorry, just couldn't hear you. Like you mentioned, you know, early today, just prior to market open, we actually saw a very interesting acquisition that was announced by Larsen & Toubro. The company is looking to acquire close to 21% stake in an NSE-listed company called E2E Networks. Along with this particular acquisition, Larsen & Toubro will also go ahead and nominate up to 2 directors on the board of directors of E2E Networks, and L&T expects this particular transaction to be completed by December 31st of 2024. Now, the current market cap of E2E is close to 8,345 crore rupees. And let us look at the 2 tranches in which L&T will be picking up the 21% stake. The first tranche, this particular acquisition, will be done via a preferential allotment where L&T will pick up close to 15% stake in E2E Networks. The preferential allotment would be done at a share price of 3,622 rupees a share, which when you calculate the market cap of the company comes to a little over 6,100 crore rupees, a slight discount to the current market price. Along with that, there is also a secondary acquisition that L&T will do from the promoters of E2E Networks, and that will be for a 6% stake. And that acquisition will be done at close to 328 crore rupees. The value per share is 2,750 rupees a share, which values the company slightly lower at 4,640 crore rupees. L&T further says that this company will not take a controlling stake as far as E2E Networks is concerned. So the stake is expected to remain around these levels only pursuant to the proposed acquisition, and will be a minority shareholder with certain protective rights. Now, talking about E2E and what does it do as far as L&T is concerned, it's an Indian cloud company offering public cloud services, specializes in providing CPU as well as GPU-based cloud computing platforms, also helps customers carry out large-scale general as well as AI workloads, and L&T believes it will be complementary to the current portfolio of services that it offers to this specific set of clients. Along with that, E2E also has an existing relationship with NVIDIA. Now, talking about E2E financials, as far as FY24 was concerned, revenues of close to 95 crore rupees, PAT of around 21.5 crore rupees. So, on a market cap to sales basis, acquisition does look expensive, but it'll be interesting to see what L&T has to say further in terms of the rationale for acquiring this particular stake, such a large stake in E2E Networks.
Okay, so the valuation appears to be a bit expensive, and that's because the kind of rally the stock has seen. E2E Networks, let's just pull that up. In the last 3 months, the stock is up 200%. So far in 2024, it's up 650%. And in the last 3 years, the rally in the stock price is 10,000%. Wow. Absolutely staggering, the kind of return, the up move we've seen in E2E Networks. But let's talk about Gland Pharma. It's surging in trade on the back of its Q2 numbers. Vinny joins in to tell us more. Vinny.
Good morning. Yes, we're seeing Gland Pharma surging in trade today, from the day's lowest point, a sharp recovery that we're seeing coming in for Gland Pharma. Numbers, not that much of an excitement. We were seeing a bit of a subduedness that we saw in the quarter because the core market of the company was impacted by the US business. Weaker than expected pickup that they saw in the US and rest of the world. But the company also lowered their guidance. But despite that, the stock is seeing a run up today. The company has actually maintained their outlook in terms of EBITDA break-even. And this is going to be X of Cenexi drug, which they're talking about. So keeping an eye out on that. Low double-digit growth in FY25, positive EBITDA by FY26 is what they've said for Cenexi as well. So yes, keeping an eye out on that. The outlook may be something that everyone was watching out for. Though brokerage reports in the morning, they'd lowered their estimates as well. Whether you look at a Goldman Sachs or even a Investec, they'd lowered and cut their target price here. But keep an eye out on this one. Recovered from the day's lowest point, and the stock had not done much in the last 6 months. So that is something that one could be watching out for because it was trading around 25, 26 times FY25, 26p. So it will be interesting there.
Okay, 12.5% higher. Thank you so much, Vinny, for joining us with all those details. Well, we spoke about stock-specific news. Let's get to market fundamentals now. Santosh Singh, who is the fund manager at Motilal Oswal Asset Management, is joining us now to discuss the way forward for the markets. Santosh, good morning. Thank you so much for joining in. Well, give us a sense of how you've looked at the earnings so far. We are halfway through. And do you think something stood out and something that you think at these levels is looking attractive?
So the earning season per se was not in line with expectation, was slightly lower because what we saw was that the consumer side of the business or consumer side of the market has shown a bit of weakness, which is visible in almost all the consumer company stocks, consumer company sort of results, right? So that was one. Secondly, what we saw was the stabilization happening in the IT space and in the banking space. The stability was coming per se in IT and banking, but the unsecured side of the business in banking has been doing tremendously badly. So that was the another highlight which came through, right? And what you are also seeing is that barring few companies, the order inflow is now not growing the way it was growing in the past. So clearly, all in all, what we are looking at is maybe a downgrade happening for the year in Nifty estimates for the market. And that's what we are seeing in the stock market.
By the way, some numbers coming up from ABB in the conference call. The volumes may plateau before a jump up from the market. The stock is under pressure. It's been down 5.5%, and it slipped after the conference call began. We'll connect with Vamakshi. She's been listening in to the conference call, and she'll join in with the key takeaways. So Santosh, can you give us a sense whether this downgrades, the earnings weakness that we've seen, will persist for the next 2 quarters, at least for FY25? Is it possible that in Q3, Q4, we will continue to see earnings downgrades? Can this spill over into FY26 also? What is your own assessment?
So see, the estimates are pretty high, right? We are talking about closer to 13-14% sort of growth rate. As of now, I think there will be a cut by the end of this quarter. But we are talking about those sort of numbers. Right? This year, a double-digit number, I think, is looking difficult from an earnings growth point of view for the market as a whole. So that's this year is slightly difficult, I would say. Next year, given the cut which is going to happen, I think we are going to see some cut in Nifty estimates even for FY26. So, but not as sharp as what we can see in this year, because there are some counterbalances which are there in the next year. But yeah, earning our downgrade cycle is one thing which we have not seen for last 2-3 years, and then the new investors are not accustomed to earnings downgrade. So I think
you're saying double digit is difficult this year. So is it possible that in Q3 and Q4 also there will be earnings downgrades to come to this eventual 8-9%, or will it be lower than that? And what about FY26? Again, estimates are that it will be double digit. Is there a risk to that?
So see, it depends. If people downgrade to 7-8% in this quarter itself, there won't be any downgrade. But if they are going to do it gradually, then yes, there could be a downgrade in Q3 and Q4 as well. Because it all depends on what everyone is doing. But yeah, means what we are seeing today and what might happen, there is a gap of 4-5% in the earning estimate. And that's where next year also we could see a couple of percentage point downgrade, which people may start doing it in this quarter itself. That's my view. But let's see how it plays out. I'm not seeing a big downgrade for next year, but this year it's quite big.
Okay, so this year could see a bigger downgrade versus what we would see next year. Santosh, any pockets or any sectors which you think have come back to reasonable levels or something that you would like to invest in?
So, the sector which is quite reasonable, and I've been saying for the last couple of months, is banking, actually. That has not done anything for last 3 years. We have been underweight for a very long period of time. And I think it's one sector which clearly seems like where the numbers might have bottomed out, because the net interest margins might have bottomed out or will bottom out in next 1 quarter. So, and then the sort of valuations are either below average or closer to average for this particular segment. So that's one segment I would say I would watch out for.
Okay, all right. So banking is one. And what are you making of some of these NBFCs, Santosh? We have been talking about that pain coming in microfinance. We're talking about some issues there. Do you think some of the NBFCs would stand out in this case?
So what we saw after sort of COVID was that I would say that the NBFCs on the unsecured side started showing so much of growth. And that is what is causing pain for a lot of NBFCs and the MFIs, the unsecured side of the business. So and then the good part with the unsecured side of the business is they're sort of short duration products. And given the RBI's focus, I think you will see earlier what you could have seen if the RBI was not so much focused, what you could have seen was that this could have gone on for 1 or 2 years. But the sort of focus which we are seeing from RBI to contain this issue and do it as fast as possible, we might see that in 1 or 2 quarters, everything can get provided for.
Santosh, thank you very much for joining in. Hope you had a good Diwali and wish this coming year brings all of us a lot more good health, happiness and prosperity. Get into a break. We'll come back and discuss commodities. We'll invite Manisha Gupta on the show.
Welcome back. You're still tuned into Trading Hour on CNBC TV18. Well, we spoke about the equity markets. It's time to focus on the commodity space. Manisha Gupta joins in today. And today we are focusing on copper. Manisha, what's the update here?
Thank you for that, Sonal. Well, unlike in equity markets, there's one sector in commodities which continues to do well, and that has been energy and metals as well. Most of the base metal prices have continued to trade on a firmer note. Overnight as well, we saw copper prices gain up by 1.5%. It's trading more than 0.5% higher on your screens right now, and that pretty much has been the case with other metals, where 0.5 to 1% of gains is what we are trading with right now. Copper, for one, is trading at a 2-week highs, and this comes in on the back of decline in US dollar index, which is off its 3-month highs as it was trading. The US jobs market number in the month of October has come in on the flat note, so market's not getting any cues on to that, on what kind of statement we could hear on the day that the US Fed meeting is happening. Well, the decision of 25 basis points have been factored in by the market already. The China manufacturing activity for the month of October also has been on the positive side. That has been another reason that you are seeing gains into the markets. All focus clearly on the China National Congress meeting, which is underway. We have seen the PMI data come in, which has been positive, but no word yet on stimulus. So more concrete statements are expected towards the end of this meeting, which is 7th and 8th perhaps. And apart from that, it also is going to be about the US presidential elections, where the markets do believe that if Trump comes in back as president, you could be looking at increase in tariffs on imports when it comes to China, almost by 60%. In some extreme cases, the number even goes higher to 150% as well. As far as Kamala Harris is concerned, well, the expectation is the ongoing structure is what would be extended going forward as well. So next 24 hours, a lot could change when it comes to all of these markets. But at this point in time, we are getting into that very important event with gains.
Thank you very much for that. Get into a break. We'll come back and talk technicals with Mitesh Thakkar and get his top trading bets too. Stay tuned. Welcome back. While the markets await those big global events, it's also a big results day. So you've got Titan, Dr. Reddy's, but outside of these index heavyweights, you've got Gale, Berger Paints, Manappuram, you've got Bharti Energies, one of the recent listings, Mankind, Max Healthcare. These are some stocks where we're awaiting numbers later. Mitesh is now joining in with a quick tech check on the markets. Mitesh, what have you made of the day so far and the weakness seen in the broader markets?
A very quiet day, actually, nothing much happening, and didn't even get to the trailing stop loss which we had of 24,050. So we'll maintain shorts with that kind of stop. Though I think the good thing is that it's not falling much, so then there is a hope that late afternoon we might see some recovery. But for the time being, since that's not happening, we are keeping a negative bias on. Granules is something which has come on radar. If it breaks, levels of 539, 538, and it's trading around 543. So sell below 538, keep a stop at about 550, look for a target of 510 to begin with. And the other one is Godrej Properties, which is trading below its support levels. So sell here with a stop at about 2800 for targets of 2690.
Okay, so those are some individual picks. Mitesh, what do you make of the metals pack right now? Today, it's rallying. You think there's some decisive move that we are seeing there?
Quite possible, actually. There's some traction on the charts of JSW Steel. Though the entire pack isn't looking very attractive to me, I think stocks which have corrected a bit and are trying to give a reversal on the hourly and 2-hourly charts can be interesting. And metals is one sector which is featuring regularly on that list. So the strongest in the short term is JSW Steel. Buy here with a stop at about 960 for targets of around 1020.
Okay, thank you very much for joining in. Get into a break. On the other side, Anup Vijay Kumar from Capital Mind Financial Services. He's done some analysis of the recent big IPOs, the way they've performed post-listing, the big, the small. So all the trends from the primary market coming up next with Anup. Stay tuned.
Welcome back. You're still tuned into Trading Hour. Well, for the markets, it has fallen further from the highs. So it's a 45-point cut that we're seeing on the Nifty currently. Almost at the day's low, actually. Yes, there's a sharp fall that we're seeing from the highs. And what is leading to this fall? If we talk about the stocks from the Nifty pack, some of the stocks have moved to the low point of the day. And some of them include Bharti Airtel, we have Hero MotoCorp, Axis Bank, Bajaj Finance. All of them are at the day's low. And that is something which is putting some pressure on the Nifty as well. But some stocks which are bucking the trend, so Tata Consumer should come up for you on the screen. That stock is at the day's high. It's up 1%. So some comeback in some of these consumption names. So there you go. Eicher Motors, the auto pack is doing well. So that is the one which is contributing a little bit to the gains that we are seeing as well. In the broader markets, we do have something like a Tilak Nagar Industries after a strong set of numbers, which is doing well. So that stock is up 17% right now, though the mid-cap index has moved to the low point of the day. If we also talk about other names which are doing well, we have Bharti Energies, Premier Energies, both these stocks up anywhere between 5 to 7%. Remember, Premier Energies was up yesterday as well because of a big order, and today it is surging even higher at the day's high, 7.5% there. We have
Bharti reports numbers today.
That's the same Bharti, right?
You were talking about Premier, I thought you were talking about Premier went up because and you were talking about Bharti. So Bharti reports numbers and Premier was that order win.
Yes, the order win, which continues as well. Yeah. So a lot that's happening actually in the broader space, and that is exactly what we are going to be talking about. But it's a very IPO heavy week as well, Rima. We have spoken about how IPO lineup has been very strong. This week we have Swiggy. Tomorrow we have an energy IPO which is coming up, the Acme Solar IPO. Then we have
today the Sagility India
Sagility
IPO
India.
And this is a PE owned, 100% PE owned company.
So the lineup continues, right? So let's talk about the primary market action as well. Several big IPOs are expected this week, from quick commerce giant Swiggy to insurance provider Niva Bupa. But how has the performance been of some of the biggest IPOs so far? We discussed these trends with Anup Vijay Kumar of Capital Mind Financial Services. Anup, good morning. Thank you so much for joining in. Well, you have an interesting report which you've put out. Can you take us through the synopsis of how some of these big IPOs have performed so far? And I believe the report is only till 11th October, so some of the bigger ones like Hyundai won't be there.
Right. So thanks for having me on the show. So yeah, essentially our objective with that analysis was to look at the overall IPO landscape and see how historically IPOs in general and then specifically large IPOs have done. So I mean, just as a data point, over the last 20 years, there have been over 1,000 IPOs, and we sort of classified each of them into three buckets. One was the ones that gave negative returns, and then the ones that gave positive returns, whether they managed to beat the CNX 500 as the index benchmark. And what we found that overall across the universe of IPOs, roughly about 50% of the IPOs have managed to beat the broader benchmark index. Out of the remaining, roughly 30% have been negative, have been negative, and then the others have given positive returns but have not quite beaten the index. But then, interestingly, when you shift the focus to the larger IPOs, and we looked at the top 30 as a sample set, the odds kind of change a little bit more, rather unfavorably for the investor. Roughly 40% have beaten the index, the CNX 500. The remaining 60% have not. So, and out of those, 30% have been negative, 30% have been positive, but have trailed the index. Given roughly half the returns of the index on an annualized basis. So it looks like the larger IPOs have tended to, I would say, disappoint in terms of giving long-term returns. And we've kind of focused on long-term returns in this study as opposed to just looking at the listing gains or the short-term returns out of these IPOs.
Anup, you also go on to say that most late-stage bull markets are characterized by a few large IPOs, which tend to be valued optimistically. So given what we've seen and the sort of tepid performance of the large IPOs, do you think we're in this late stage of a bull market? What does history and analysis tell you?
So it's impossible to call the top of any bull market, but then any bull markets that's been in place for the last 1 or 2 years, you could consider that to be sort of a mid or late stage of the bull market. And from what we've seen, typically large IPOs tend to come out once we've seen index highs for 1-2 years consecutively, which is what the case is currently. And maybe that is one of the reasons why they tend to be priced quite aggressively in terms of valuations to multiples to earnings, etc. And once that happens, there's very little margin for error for those companies when they report their results subsequently in the next few quarters. Any kind of moderation in growth tends to get punished by the market. So that is, one hypothesis on why large IPOs tend to struggle to give decent returns.
I know we've been talking about Indian markets and the big IPOs here, but is there any comparison as to how they've done globally versus the bigger IPOs, of course? Our pipeline is much stronger in terms of the number versus, say, what's happening in the US. Is it a global phenomenon where the bigger IPOs do not do as well?
So interesting point that you make about India being a small portion. Now, in general, India has been a fairly small portion of the global IPO pie. But if you look at 2024, obviously the top place goes to the US, where they've done over 40-50 billion in terms of IPOs. But India is actually second place when you consider all major markets in terms of the sheer value of the IPOs that have been done. Over the last 2 years, we've seen over 370 odd IPOs. Totaling to about 14 billion US dollars, which is quite significant given the overall size of our market. So to your question about global markets, that tendency for IPOs to cluster around bull markets once they are well underway tends to persist. So whenever you see a bull market's been in place for a year and a half, 2 years, is when a lot of these IPOs tend to come out, which is logical given that that's a favorable environment in which promoters want to sort of sell their shares to the public. It's just that from an investor's point of view, they might not necessarily be always the best stocks to be owning for the long term.
Have you done any analysis of the mid-size, IPOs and how they fared? And is there any trend that you'd like to call out?
Overall, I would say the offering size seems to matter. Offering sizes of which are relatively smaller in the 2,000 to 3,000 rupee range, or 2,000 crore rupee range in terms of offer size, have tended to do better compared to the ones that exceed like 5 and 10,000 crores. If you look at our top 30, I think our 30th would be probably First Cry, which was about a 4,000 crore IPO. So our IPOs are still not massive in terms of if you were to take the global context. It's only now that we're seeing some of the really big IPOs, but I think it's more a function of when these IPOs come out, as opposed to their sheer size, that often tends to drive the returns that they deliver. Even amongst the bigger ones, we've seen some fairly good returning IPOs in the form of Zomato. Coal India, which listed way back in 2010, has done reasonably well for investors if you were to compare it against the benchmark index. So, and it really is a function of the size as well as the valuation that they come out at, and that tends to be slightly aggressive in late stage bull markets.
Okay, size does matter. Thank you, Anup, for joining in with the analysis. Okay, get into a break, but as we do that, we'll get you some good news. Now, Network 18's Money Control, which is India's leading digital financial platform, has achieved the remarkable milestone of surpassing 10 crore unique visitors in October of 2024. Now, according to data from Google, this achievement further widens Money Control's lead as India's top business and financial news platform. Welcome back. Now, JK Paper recently reported the Q2 numbers and things were a bit under pressure for them. Net profits declined 58%, EBITDA contracted 35%, margins came under pressure, and the top line growth was just 2%. A.S. Mehta, President and Director at JK Paper, now joins us on the show. Mr. Mehta, we've been talking about, moderating demand, how top-line growth for the company has not been there even last year and even so far in FY25, in the first half of the year, we haven't seen too much by way of growth. What is the outlook looking for the second half of the year in terms of volumes, in terms of realizations, and what it does to your, margins?
See, in fact, there is a pressure on profitability. You are absolutely right, and this I commented in the previous quarter as well, because such a high or inflated raw material cost has impacted the profitability of the company. And I mean, such a raw material scenario we have not seen in last almost 7-8 years, which has now happened. In fact, this is the outcome of no plantation, or rather very minor plantation during the COVID period, which has now started impacting. And in fact, it was known to us. So this is one. The second, as far as the demand is concerned, I would say demand, there is no major issue of the demand. In fact, the industry is seeing a demand. Packaging board, it was very good demand in Q2. Writing, printing, the copier was all right. And the map litho, in any case, this quarter remains all the time a slow quarter, because the commercial printing and the publication, they start only after October or November for the new session. So I wouldn't say that the demand is a major issue at this point of time. But certainly, the cheaper import has started coming in India, and that has started creating some kind of a sentiments in the market where the customer and the channel partner, they are very cautious in buying. In fact, they are liquidating their inventory. So that is one factor which we need to keep in mind.
So, Mr. Mehta, give us two numbers. One, how much lower are the import prices versus the domestic prices right now? And, you spoke about wood cost, which continues to remain high. Is this something which is expected in the second half as well? If that happens, what kind of growth levels in terms of volumes are you looking at in FY25? Will it be lower than FY24?
See, if we talk about the volume, I would say that the volume is going to be more than what we have seen in 23, 24. So the volume wise, it would be higher.
How much higher, sir?
I would say that it should be somewhere around 6 to 7% higher. Okay. It should be higher because the industry is growing at a fairly good rate of weighted average 7 to 8%. So in fact, we should have the same kind of a growth number. Only thing is that the writing printing, we are more or less operating at 100%. So the packaging board should give us a growth. And overall, I would say that volume wise, it should be 6 to 7% growth. But the NSR is lower than the last year. So I won't say that the same volume growth we will see in the top line in the in the rupee term. This is one scenario. Your question on the price parity of import as well as the local prices, I would say that like the packaging board right now, price difference would be close to 10-12%.
Sorry, could you repeat? 10-12% is how much cheaper the imports are?
Packaging board, the virgin packaging board, I would say that the prices of imported may be lower by 10 to 12%. So that has started impacting. In fact, at a current our pricing level, it is lower at 10-12%. But if I compare a sustainable pricing of packaging board, it should be somewhere around 7-8% higher from a current level in the domestic market. So at that level, the import and domestic price difference would move from 15 to 20%.
So, sir, how does the industry combat and go through this? Because this is now, more than 2 years of challenging, times. I was looking at your margin profile. In FY23, your margins were 31%. FY24, they came down to 24%. In the first half of the year, it's down to 16% at the EBITDA level. There is the threat of increasing imports, as you called out. They're cheaper. Wood prices continue to remain elevated. And there is also demand for wood from the plywood industry. So you're also competing on that limited supply for, your raw material, which is wood. So, what is the company doing to get out of this funk?
All right. See, the 2-3 things when we talk about the wood, in fact, we have been requesting plywood and MDF people to also do plantation. But sorry to say that they don't do much on the plantation part. Whatever plantation we do, and they take material out of our own area. So we have to accept this scenario that we need to continue our focus on plantation and more plantation. So in fact, this is what we have done. Our current year plantation is going to be much more. Last year we did close to 60,000 of acre of plantation, or more than that, 61 to be very precise. And this year we are going to do something around 65,000 acre of plantation. So, and in fact, our need is not more than 40,000 acre of plantation, but we are doing. And in fact, what we have discussed in the paper industry, let's do plantation for plywood and MDF people as well, so that collectively in India, we don't face that scenario. And hopefully in next 12 to 15 months time, I'm pretty confident that the wood scenario will be far more comfortable because the wood availability would improve drastically in the year 26-27. So that is one area. And in fact, we will have to live with this wood scenario for next 9 to 12 months time, because the cycle correction, it takes minimum 3 years time.
Okay,
This is on the raw material front. The demand, as I said, that the paper market, India is the fastest growing paper market. So our growth should remain at 6 to 7%, which is a fairly healthy growth. Only thing is on the price front. See, we have been talking to the government on this issue of the very, very uncompetitive dumping by the Indonesian player, and China. The dumping is not that issue, is not a major issue. Yes, there is a dumping from China as well, but since there is a 10% duty against China, so at least there is some protection from China. But Indonesia, being a part of the ASEAN country, there is no duty. And in fact, the import is coming from Indonesia at a very, very low price. So in fact, we have already gone for an anti-dumping against the China and Chile right now, and we will be moving against Indonesia also, so that the domestic industry is protected from those the cheaper imports.
Okay. All right. Thank you so much, Mr. Mehta. Would have liked to chat a little bit more, but completely out of time. But thank you so much for putting that spotlight on what's happening with the industry as well and the company specifically. Let's move on now. As CNBC TV18 celebrates 25 years of excellence, we invite you to the most anticipated event of the year, the CNBC TV18 Global Leadership Summit, bringing together visionary policymakers like Finance Minister Nirmala Sitharaman, RBI Governor Shaktikanta Das, industry leaders like HSBC India's Hitendra Dave, Kotak Mahindra Bank's Uday Kotak, and trailblazing startup founders. This is where the roadmap for India's next 25 years of growth and global leadership will be charted. You do not want to miss this. Welcome back. You're still tuned into Trading Hour. Let's talk about the big global story. The United States heads for a high-stakes presidential election later today. Polls show Kamala Harris and Donald Trump neck and neck in the race for the White House. Our colleague Parikshit is joining in with the latest. Parikshit.
Roughly 82 million American citizens out of 186 million registered voters have already voted. This means more than 50% of the total votes cast in the 2020 election are already in via early voting. Now, when does voting actually begin on election day? On the 5th of November, voting begins at 5 a.m. Eastern Time in Vermont and between 6 a.m. Eastern Time and 12 p.m. Eastern Time in other states. First polls to close would be in eastern counties of Indiana and Kentucky at 6 p.m. Eastern Time. This would be followed by Georgia, South Carolina, Vermont and Virginia. That would close by 7 p.m. Eastern Time. The all-important state of Pennsylvania is likely to close by 8 p.m. Eastern Time. Alaska would be the last state to finish voting, and this could go on till about 1 a.m. on 6th of November in the United States. By 6:30 a.m. India time on the 6th of November, polls may project a winner in the crucial state of Pennsylvania, which may give a sense of the national mood. The overall results and the winner could be announced on 6th morning unless there is a recount due to a narrow margin of victory in the swing states. And this is being expected because the victory margin, according to most polls, is very, very narrow right now. And in case there is a recount, it could take hours or even some days for the winner to be projected. After Iowa, Harris is expected to win Nevada, according to John Ralston of Nevada Independent, which has a very strong and robust track record of polling. Harris will win 48.5% of the vote and Trump will win 48.2% according to the Nevada Independent poll. Independent voters, according to Ralston, will be giving a narrow victory to Harris in Nevada. According to Washington Post average of polls, Trump is leading Pennsylvania by just 1 point. Harris has a marginal 1-point lead over Trump in 4 national polls, but overall the race is tied and remains too close to call.
Pariksha, thank you very much for that. And CNBC TV18 will be covering the race to the White House with our special programming, which will take place in the evening, giving you updates through the course of the day. The first show is at 6 p.m. and then we've got another special lined up at 7:30 p.m. So do tune in to that. Let's get back to the markets. And by the way, the fall in the markets is now accelerated. We started off flat on the benchmark indices, but now we're down 130 points on the Nifty. The Sensex is down close to about 450 points. The mid-cap index has extended the fall from 0.5%. Now it's down 1%. And there's a sudden turn in the market sentiment. Banks continue to come under pressure. Realty, pharma are the other sectors where the weakness is quite evident. ABB conference call was underway. You were seeing some of the important takeaways. Vamakshi joins in what she's made of the management commentary. Vamakshi.
Well, absolutely, Reema. When we look at the numbers of ABB first, they were a rather weak set. Order inflow came in at 3,324 crores. This is slightly lower than what the analysts were working with and slightly lower as compared to the quarterly run rate that they've posted in the last couple of quarters. Revenue missed estimates by 11%, and that is because the order book tilted towards long cycle orders, which now accounts for nearly 25% of their order book, and this impacted conversions from order booking to revenue. EBITDA margin expanded by 272 basis points for the company, and that was mainly on account of the fall in the raw material prices, which led to better gross margins. EBITDA as well as net profit both missed street expectations by nearly 8%. Now coming to the con call takeaways, the management was slightly cautious on the conversion rate. They said that the velocity of conversions from order booking to revenue may not be at the same pace as seen in the past, and that is mainly on account of the higher share of larger orders coming in the order book. Larger order execution is still to gain momentum, they say, aligning with the project schedules. They are seeing, however, private capex pick up along with public sector capex pick up. They believe that a healthy order intake for them lies in the range of 2,500 to 3,000 crores, but it is very difficult for them to call when they will be hitting the 4,000 crore quarterly order inflow mark. The order pipeline in front of them, they say, is fairly robust, but the volumes may plateau before seeing a big jump up. A lot of uncertainties in global areas. As it gets clear, they may see some bit of benefit come through, but they have no correlation metrics for this. And as far as exports are concerned, they contribute nearly 12% to the overall revenue, and they say that there is still room to cater to Middle East as well as Africa, but their focus will be on the domestic market. So overall, weak set commentary not as positive, and resultantly the stock is declining in trade today.
Okay, yes, it is a big cut there. Thank you so much, Vamakshi, for bringing us all those details. And on that note, we'll take your leave on this edition of Trading Hour, but do stay tuned. Halftime Report is up next.